Hey everyone, I'm Evan, and welcome to Finpod, your essential daily financial digest. Whether you're tuning in before the market opens, or, like right now, for our aftermarket recap, we've got you covered. Finpod is brought to you by Fintwit.ai, a leading platform for real-time trading signals from X and AI-powered stock analysis. Let's break down what happened today. First up, let's talk about what was trending on X today, the stocks that had the financial community buzzing. Topping the charts was Meta Platforms, which saw a significant drop of 8% today. This came after a tough day for the social media giant, as they faced some courtroom losses in California and New Mexico, being found liable for failing to protect young users on their platform. Following Meta, we had Google, or Alphabet Class A, down over 3%. Lumentum Holdings also experienced a sharp decline, falling more than 11%. Microsoft was down just over 1%, and Apple, in contrast to the broader tech downturn, managed to close up slightly, 0.1%. The general sentiment on X was certainly focused on the tech sector's struggles today, especially with Meta's legal headwinds. Now, for a broader look at the market's close today, March 27, 2026. It was a challenging day on Wall Street, particularly for tech. The Nasdaq Composite officially tumbled into correction territory, dropping more than 2% and marking a decline of over 10% from its October high. The S&P 500 also had a rough session, falling about 1.7%, its biggest daily drop since the start of the Iran war, and is now down over 7% from its record high. The Dow Jones Industrial Average wasn't spared either, closing down about 1%, extending its monthly loss to beyond 6%. What drove this action? Geopolitical tensions, particularly renewed Middle East tensions and surging oil prices, were a major concern, influencing inflation expectations. The yield on the 10-year Treasury note also rose, hitting its highest level since July, which typically puts pressure on growth stocks. There was also mention that the U.S. president announced a 10-day pause on attacks against Iranian energy infrastructure after the closing bell, which saw U.S. futures rise slightly in anticipation, but it didn't save the regular trading session. Volume was relatively high, and breadth was certainly to the downside, with decliners significantly outpacing advancers, especially in the tech-heavy Nasdaq. Moving on to the AI economy, which continues to be a dynamic space. Today, a significant piece of news came from the private AI sector. Anthropic, the creator of the Claude AI model, scored a notable legal victory. A federal judge in San Francisco granted a temporary injunction against the U.S. Department of Defense, blocking the Pentagon from labeling Anthropic as a supply chain risk. This decision is seen as a major shift in how AI companies might relate to federal agencies, particularly concerning sensitive defense contracts, and could set a precedent for other AI firms facing similar government pressures. Beyond that, the multimodal learning market, a key area within AI, continues its rapid expansion. Reports today indicate its valuation is expected to rise from just over $1.4 billion in 2025 to over $1.7 billion in 2026, driven by advancements in deep learning models and increasing enterprise adoption. There's also ongoing legislative activity around AI, with numerous bills across U.S. states addressing everything from AI safety to data privacy, and even the use of AI in healthcare plan determinations. The demand for AI skills is also surging in the job market, with mentions on resumes tripling in 2 years, though colleges are reportedly struggling to keep pace with this demand. Now, let's turn our attention to some individual stocks that made notable moves today, outside of the tech giants we already touched on. Energy stocks in general had a strong day, with several hitting 52-week highs. ExxonMobil, Chevron, ConocoPhillips, and Valero Energy were among those seeing gains, driven by the elevated crude oil prices. For instance, Valero Energy was up almost 6%. This reflects the ongoing geopolitical concerns and their impact on the energy sector. On the other side of the spectrum, we saw some significant declines. While not a top trend on X, OceanPal, for example, announced a 1-for-20 reverse stock split effective Monday, with fractional shares to be cashed out based on today's closing price. This type of corporate action can often lead to volatility in the stock. Finally, let's dive into some of the earnings results that crossed the wire today. Carnival Corporation reported its first quarter earnings before the market opened. Analysts had been expecting earnings per share of 18 cents on revenue of about $6.14 billion. Investors were keenly watching for any revisions to their fiscal 2026 guidance, especially given the surge in fuel costs due to the Iran conflict. The stock closed down about 1.8% today, suggesting some disappointment or caution around their outlook, despite the actual results still pending for a full analysis. Axia Energy, which was scheduled to report after the close, had analysts estimating earnings per share of about 18 cents on revenue of $1.95 billion. While we await the full official report, previous earnings for the company indicated a decline in earnings year over year and weaker profitability despite revenue growth. The stock closed down 3.3% today, likely reflecting anticipation of those results. Legends Corp also released its fourth quarter and full year 2025 results before the market opened today. The company specializes in engineering and consulting for critical building systems. The stock finished the day down just over 5%. Telkom Indonesia saw its stock fall by nearly 2% today. The company had an estimated earnings per share of about 32 cents. TMC, the metals company, was also on our radar, with an estimated earnings per share of a negative 6 cents before the market opened. The stock managed a slight gain of less than 0.5%. And that wraps up our aftermarket recap for today, March 27, 2026. We covered the trending tickers on X, a challenging market close driven by geopolitical concerns and rising yields, the latest in the AI economy with Anthropic's legal win, and some key stock movers and earnings reactions. For detailed analysis and AI-powered stock insights to help you navigate these markets, be sure to visit Fintwit.ai. Don't forget to like, share, and subscribe to Finpod so you never miss an episode. Until next time, I'm Evan. Stay informed, stay ahead.